Well, fixed income is this great asset class, isn't it, that you can get whatever you want out of it in terms of you can get equity-like exposure if you go into very high-yielding credit or into hybrid securities. On the other hand, you can get dead safe assets if you buy government bonds or stick it in cash. So it's really, that's the endlessly fascinating nature of fixed income, is us as managers to try and tailor that range of return streams, that range of risks that we can provide, and give it to the client in the way that they want. So we're coming off a really strong run of years of total return in fixed income. It's been high single-figure returns, low double-digit returns for a number of years now in fixed income, which is unusual for us. We're generally the anchor of your asset universe, generally the defensive asset class. So those years of strong returns, I think, are baking in a number of years of slightly lower returns, and that then makes us as managers really rotate around to the true underlying qualities of the asset class. What are they? What appeals to most investors? And that, of course, is a combination of steady income, security, and a defensive nature of a portfolio against what generally is a lot of correlated risk in other parts of diversified funds and a lot of equity risk. Well, base interest rates are obviously very low around the world, and that's something that we have a number of conversations about with lots of clients. The bulk of our clients are, on balance, I think, worried about an interest rate cycle that rises from here, threatening total returns in fixed income. That's one thing we're definitely monitoring, and we're under increased pressure, rightly so, I think, from clients to balance both outperformance against an index against the potential for a negative total return. And we're increasingly finding clients are looking at us to balance those two sometimes competing goals. Well, I think that for me it really goes back to that philosophy of and what you regard as being wise, what you regard as being the optimal way to set up a decision-making structure. Well, I think we are very clear about where we're experts and where we're not, both regionally and across asset classes. So we bring in expertise across the firm to make all our decisions together. That's a really differentiating factor, I think, for us against other managers. We're not a collection of boutiques, we're not a collection of star managers, we're a collection of really well-ordered approaches to gathering information, processing it across the firm, and honing it in on the decisions that make the best value for our clients.